Yeah, Tuesday. What's up, everybody? Tuesday morning. Welcome to today's edition, Daily Market Commentary. I don't know about you. I'm fired up. It's going to be a great day. It's one of those days where I just kind of feel like it's going to happen. We're going to get a big move in the market today. I feel it. I don't know about you. I'm just kidding. I don't know if it's going to happen or not, but it's fun to talk about. So if you're new to the channel, do me a favor, click the subscribe button, hit the notification bell. You get the alerts, the updates, all of that stuff. When you are subscribed, we are looking at some couple of changes to the live daily market commentary, maybe doing a little bit more streaming, considering doing a few more live sessions, maybe even some more focused on forex. And so as we expand and grow, we'll talk a little bit about that if you guys have any questions. So do me a favor, if you're watching, type in the chat window, say hello to me this morning. I like to make sure that I know who's here with us. I know looks like I got about 30 of you on so far this morning, and the number will continue to grow as we get started. So type in the chat box, say hello this morning. Let's go ahead and get started with our markets. Starting with our markets. There they are. Kowal, Dennis, Kurt, Dion. What's up? What's up, everybody? Tony Breen. Trent, what's up, dude? All right. Hopefully everybody is having as beautiful a morning as we are here in Houston. It's like 47 degrees. It's gorgeous. The sun's out. It's one of those days where I'm just ready to roll. All right, so ES this morning. When I look at this ES, what does this price pattern tell us? What does this price pattern tell you this morning? If I'm just looking at this overall, great in Wisconsin. I'm sure it is great, Mike. It's probably just great and cold. So tone up Tuesday. Look at that, Mr. Fitness Rush. I like it. Tone it up. Yeah, it looks to me like we're setting up for a breakdown. But conversely, what does the Dow Jones and the S&P, the NASDAQ look like? What does the Dow Jones and the NASDAQ look like? Just the opposite, right? I mean, just the opposite. And so we have a little bit of a mixed bag. A little bit. We've got a mixed bag, right? So there's a mixed bag in our markets. And when I have a mixed bag where one's giving me a clear breakdown and one's giving me a clear breakout, I don't normally want to take either one, because neither one are typically going to be exceptionally great moves. Not always. Sometimes we'll get a really great move out of one of them, but the question is which one is going to get their great move. So you can do one of two things. One, you can trade them both. You can trade them both and then take the breakdown on the ES and the breakout on the NQ, and whichever one hits. Now, the NQ hasn't given us the breakout as of yet, but I think the NQ is signaling a good breakout, okay? The NQ is signaling that we have a pretty good breakout. And so I like this pattern a lot. I like this pattern a lot as we've got these rising highs. The ES, I like this pattern a lot too. And so if you want to trade it, you can trade the breakdown of the ES. I'd wait till we get below this wick here. At 35.98, unless you're already in. If you're already in, that's okay too. I'm okay with you being in. And if you want to trade the retest of that area, you do have a little 15-minute retest area up here where you could get a little reversal. Now, this is a very immediate retest. And so immediate retests, I'm always a little bit, I guess the word would be biased against the immediate retest. But it is giving us a potential for a fairly quick retest, very small level there. I'd be okay if you want to get in on maybe one contract here. And then if it starts to go down, this is a good opportunity when you talk about scaling into positions. This is a good opportunity to talk about scaling into positions, because if we get into a short at this level here, maybe you get in with half your normal position size, or you do one contract. And then price comes out of there, you start to base. Well, if you start to base as price comes out of there, move your stop to break even and then add another contract on the breakdown, right? So you can scale into that position a little bit because you have two legitimate potential entries for shorts in this case. Now, on a 4-hour chart, my trend is very much not looking at shorts, right? My trend is still telling me it's to the upside. And Larry says bear flag. What time frame are you looking at a bear flag, Larry? I don't really see a true bear flag. I actually, on a 4-hour, see almost more of a bullish flag, right? So that's also a possibility. On the NQ, well, we'll take a look at that in a moment. So I think that if you want to trade the ES short, That's your best setup, is a breakdown below this wick, 15-minute reversal level in here. If you want to trade it long, you're going to have to get above some of these highs. And so it's a little bit tougher to look for a long at the moment. Now, if you want to go long, the NQ's your man. The NQ is the way to go. Now, you were talking about a bear flag. I don't really see a bear flag, Larry, on the NQ. What time frame are you looking at? Are you looking at, this into here? I don't truly see the bear flag on the NQ. I'd have to, I see more of the bullish setup when I look at this NQ. Santa could be kicking in soon. So I would say your NQ, you've got to break out above this 12,058 region, which is still, you're still 20 points away from there, right? It's not imminent. It's not an imminent breakout one way or the other. Now, I will say this, as far as demand levels below me, when I look at the demand level here in the S&P or in the NASDAQ, I've got a reversal level here. Well, that level appears to be a bit of a breakout of a reversal from this area right there. And that's our whole round number support. So, I think this is probably your better level for a reversal, but I'm going to put it as a confirmation entry. All right, right in there. So right there at that 12,000. So next level would be the Russell. So looking here at the 1-hour chart, we have a rally base and then a very strong rally. This was our level from yesterday, where price came back into this area. We did get a nice move out of that level. I'm not sure if any of you were able to catch that move out of there in the Russell. It gave you a second opportunity at that zone, and now we're back in it for a third time. So when I see a level that's been hit once, been hit twice, and we're touching it a third time, what's the next most obvious move? Our next most obvious move would be price breaking down from here. Yeah. And so let's keep that area in mind. Yeah, down we go. And so that's the area that I'm looking at in here. Now, if you take this reversal, this has to be a confirmation as well, because we're still in an upward trend. When I look at this on the 4-hour, it's once again just a bit of a pullback. So getting that low would drop us a bit lower. All right. So those are our levels. Now, by the way, the Dow Jones, I still like the Dow Jones above the all-time high, provided we get the quality bracing. We did not get it yesterday. We came close, and that actually made it a better breakout for when we do make it back to that level with this 29.5 still very much in play. All right, so let me share this grid real quick. Any questions on our equities markets before we move over to commodities? Any questions on equities before we move over to our commodities? All right. Going once? Double top, Ryan says. So, yeah, the Dow Jones could be a bit of a double top. It would be a, the double top would show up much more clearly on the 4-hour chart. But, looking at this from a concept of it being a double top, it's not a double top until we would get below this area here. That's when it's a confirmed double top. We have a long way to go before it would be there. Well, stop on the NQ breakout, Peter, would be below the most recent pivot. So on this, our most recent pivot, if we're taking the 15-minute on the breakout, right now it would be below here. But if we get some more basing right in front of this region, it's going to be below here. So it's going to be below the pivot just before the breakout. It has to be the pivot, though. That's the key. Got to be on the pivot. All right. So looking here at crude oil. So in crude, we have a drop-based drop. This was our supply level we talked about yesterday that we may get a decent move away from. Now, we got a 15-minute level right in here. Now, our stop on that 15-minute level has to be the absolute tightest it can be is the top of this, the high here, which was 42.09, right? So your stop has to be 42.10 at the absolute tightest. Well, this candle right here popped up and got exactly to 42.09. So this is why we set our stops outside the wick of the leg in candle. I don't know how many times I've said it. Your stop either has to go A, above the pivot, or B, the tightest that it can be is above the wick of the leg in candle on the 15-minute time period. And this is a really good example of that. Because I was speaking to somebody yesterday who's like, well, I got into that position and then I got stopped out right in the second candlestick. Well, if you got stopped out on this candlestick right here, are you following the stop criteria? Not at all, right? And so in this case, 1, 2, 3, 4, 5, it was actually the sixth candle where we came all the way down to here. So you theoretically could have moved your stop to break even at that point, been out right there, depending on your risk tolerance. And so it wasn't a great trade by any sense of the imagination, but you definitely shouldn't have been out here. If you're out here, that tells me that we're not following the stop rules. And the stop rules tell us that the stops have to go above the high of the leg in candle when we're looking at a supply zone on the 15-minute chart at the absolute tightest. Okay? Now, that level's obviously dead. D-E-D, dead. That's not how you spell dead, is it? So what am I going to look at for today? Well, on a 4-hour time period, let me throw my momentum indicator on here. So as I throw on my momentum indicator, we can see that I've got higher highs. I've got significantly lower highs on my momentum indicator, and we're definitely seeing, even on these, the same roughly the same highs, much lower highs there on the momentum indicator. So where would be our next opportunity? We'll go into the 15-minute chart. If I'm looking for a potential short, we do have a decent demand area that we're coming into right here, which was off of this speed candle move higher. We're coming into it right now. This is not a good buying area. And the reason I don't like it is because we've got this move away, our big picture is down, and we've got basing immediately before the level. But if this red candle continues to give me a bit more strength, then I think this might actually become a decent little reversal level. So look for a quick touch off of this reversal level, because nothing really above there is super clean in terms of supply. Okay, and then I think that you have, this is the obvious demand area way the heck down here. That's the most obvious and fairly far away, but that could be where our next level and area would be. Gold. Now, gold yesterday did pop right through so if I look at this one, let me show this one. So this one, if we took a look at this one, it popped right through our level on the 15-minute time period. It hit it, and then we got a couple of candlesticks, but that level was not a 15-minute level. It was a 1-hour level. No, it was a 15-minute level. I just didn't put it the right color. So we didn't get very much time in that zone, but I think that now it's setting up for a better opportunity to move down. So you've got to break out above or below. Yeah, crude can get there in a hurry. You've got a good opportunity for a breakout above or below. The other thing to look at is where are we as far as iron condors in crude. So for those of you that are in gold, for those of you that trade gold, iron condors, we're sitting at 1886. So the 18, let me delete this one here. So the 1865 is paying 90 cents. The 1905 is paying $1.10. So that puts you here by here for 3 days worth of price movement. Okay, now that's giving you a really nice credit as long as you think price is going to stay in here within 3 days. If you want to widen that out a bit, because you might say, well, that's a little bit too tight. You can go 1915 by 1920. You're still getting 60 cents credit, and 1860 by 1855. So this is still giving you $1.20 credit for price staying here in between 1915 and 1865. I got to tell you, I like that. I like that a lot. I think that's a really nice setup. And the reason I like that setup for an iron condor is because when I look at my rate of return on that position, you've got $1.30 credit. So how do we calculate our rate of return inside of that iron condor? Well, what you do is you take the spread, and in this case, our spread is a $5 spread. Now, it's $5 on both sides, but they're only going to tie up the $5 spread. We subtract our credit. So $5 minus $1.20 credit, $1.30, we're going to go $1.20, is $3.80. So that's the amount of margin that's tied up. So then we can take a look at the $1.20 divided by the $3.80, and what we get there is 31.5%. So that's a 31.5% rate of return that I think is a fairly high probability of making money on that position. Minus commissions, right? You got to make sure your commissions are good. But I think that's a pretty good play. And so for those of you that do those trades, that's a good opportunity. For those of you that don't know what the heck I just talked about, you need to learn options. Options are they are the most malleable asset class that you can trade, allowing you to trade in any market condition, bull, bear, or neutral. And that's one of the reasons why I love options and talk so much about them. So, all right. Looking at Nat Gas, how many of you guys grabbed the Nat Gas trade yesterday as Nat Gas hit our gap and go target of 2.72? That was our target yesterday. So hopefully you were able to grab that Nat Gas, make a little bit of coin, and walk away with a smile on your face. So I'm going to remove this line here and this one, as the gap and go worked extremely well in that position. So the next opportunity would be a retest to a quality area of demand. Oh, risk was too big for you, Liz? That's all right. And that's the thing, is that with those gap and goes, the risk of that first candle has to be the right size. And if it's too much for you, then that's okay. Just step away. All right, so there's our Nat Gas, I think, decent position in that market. Copper, we didn't look at copper yesterday at all. We didn't have a breakout trade here, but we are coming down pretty well. And you know my recency bias, but that's a nice little wick over wick that just set up. So keep an eye on that little wick over wick today. So let me share this grid. And I realized yesterday that I forgot to share the grid later in the day, but Corey was actually able to get it up. So if I don't do it at the right time, then I tend to forget. So Corey was able to get it because, well, he's awesome, and I'm pretty much average. All right. And for those of you guys that don't know Corey, you guys need to come hang out at the site. Corey's the man. All right. So looking next at our ags positions, I'm just going to fly through these pretty quickly because I'm already at 20 after, and I want to talk about currencies. And I do have one currency that one of our members shoot me a text on this morning. I want to make sure that I review. So soybean futures can. Yeah, Andrew, real quick. Let me jump back to that. The put side was the 1860 by 1855. All right. So in soybean futures, we are rallying up. Pretty nice move to the upside, continuing in soy. We had on a 4-hour chart, we had a gap, we had a gap up on this move. Our demand area is still down here. You know, I think that this could be a good opportunity on a retest. I'm not going to be willing to chase it all the way up here. But on a retest, you could have a decent opportunity somewhere down in this region, especially if it happens right around pit open. Now, I got a text last night, and I apologize that I didn't answer because I didn't get it until I was already up this morning because I turned my phone off. Once in a while, I put my phone on Do Not Disturb. I absolutely love you all dearly, but I need to spend time with my wife. But I got a text last night. What time did we get the text? By the way, those of you guys that are members, please feel free to use the text line. We try to get back right away. Let's see, what was it? It was about a gap and go in corn. And was corn a good gap and go? Well, when we use our gap and go strategy, it's got to be in the direction of the predominant trend, and that's to gap outside the prior day's range. And you have to be willing to take the amount of risk that one candlestick would provide. If that's the case, then yeah, certainly it fit the gap and go scenario because we did gap up. And it did gap up into the predominant trend. The downside of the gap and go is that we were gapping up right into this 15-minute, which I have the wrong color, but it is definitely a 15-minute, this 15-minute level of supply. And so that 15-minute level of supply was enough for price to say, hey, listen, we're not going to go very far. And as a matter of fact, the 15-minute supply level got a little move off of it. So I'm going to wrap my lines around this area down here, which was the origin of yesterday's gap. I don't trade the gap itself, but the origin of the move that caused the gap could be a decent area. With price then looking up here at a potential breakout. All right. Wheat. Yesterday we looked at wheat. Price did come. I mean, this level came and nicked it right to the tick. On that level, just missed, right? Just off like 629, 20. I mean, just barely dicked by a tick on that position. And so if we just barely missed that position, I'm still going to leave it there because I think it still could be valid. It just has to switch to a confirmation entry. All right. And then so let me do a quick grid share on this. All right. Next, let's move over to bonds and currencies. Now, the currency I'm going to start with this morning is actually a currency pair. And the currency pair that I'm going to start with this morning is the Euro Japanese yen. And I'm starting with that one specifically because I got a text requesting for me to take a look at just that one. So looking here at the Euro yen this morning, the question is, what do we think about a potential breakdown below this area? And pardon me while I look at my phone to make sure that I've got all the right information here. Yeah, 1.2366. So he's looking at the three touches that we have. So we have essentially very close here. Touch 1, touch 2, touch 3. Would we consider that 3 clear touches? What do y'all think? Would we consider that definitely at least 2 clear touches and one that came very close? Would we consider that nice clear touches? Yeah, so that ticks one of the boxes. All right, that ticks one of the boxes. The other thing we need to see to tick all the boxes is in the direction of our predominant trend. Well, our 4-hour trend, what's our 4-hour trend? What is our when I look at my predominant trend direction, I want my breakouts to be in the direction of my predominant trend. And in this case, my predominant trend is probably sideways to down, but it's not a super strong trend. So it is iffy on the trend direction, not amazing, but okay. So then I've got to take a look at, do I have room to roam? Well, where's my opposing area of demand? Well, in this case, my opposing area of demand is here. That's a good word, ugly down. I like ugly down. My opposing area of demand is here. So that means that my potential reward is about this distance. This is about my potential reward. So about half of that distance is what I would need for my maximum risk. So that means that if we get basing inside of this level, my pivot has to be below this line. So when I look at this overall, my reward to risk, it's probably there. My 3 touches are there. The one thing I'll certainly need to have is basing immediately before the level. Do I currently have basing immediately before the level? Let me ask you all that. That's kind of our final criteria is, do I have basing immediately before the level? No, this basing is near the level, but it's not immediately before the level. So immediately before the level would be in this region right here. So we use what's called a trade optimization plan. On our trade optimization plan, this would score a 1 out of 2 for basing, right? And it's only going to score a 1 out of 2 for trend, which means that the most it can score is an 8 out of 10, right? The most it can score as of right now is an 8 out of 10. And that would tell us that we would not take the breakout. We would take the retest of the breakout area if indeed that trade occurs. Now, if we get that breakout with the basing in here, then it would score a 9 out of 10. And then it would make for a good trade. So does that make sense to everybody? That's how we, and I know I took a little bit longer to walk through that, but that's what I'm evaluating when I walk through a breakout, are all of those criteria. Does it have 3 touches? Do we have basing immediately before the level? Are we in the predominant trend? Do we have room to roam? And then the other one is what time of the day is the breakout going to occur, right? And I want a breakout to occur somewhere within about 2 hours of a market open. Well, we're right now at a really good time of day for that breakout to occur. Now, on the euro-yen, it's not the same because we might actually get this breakout this evening. And that's okay, too. Okay? So hopefully that answers your question. Do you think on the 4-hour that it's forming a bit of a bull flag? Well, when I look at it on the 4-hour, that's not the 4-hour, that's for darn sure. When I look at it on the 4-hour, it could be forming a bit of a bull flag, but the bull flag's a bit overextended. When I have a bull flag, I want it, if this is the pole, just imagine a flag relative to the size of its pole. If this is the pole, this flag is going to be too big to support it. So I don't feel like it's a true bull flag on there. All right. I know that took a few minutes, so I'm just going to look at the big, at my larger time frame charts here, because I want to make sure that I run through these. On the ZN, which is our 10-year note, we did come into this hourly, this 15-minute level. I didn't change my colors yesterday for anything. I was in such a hurry. We did come into this 15-minute level and got basing immediately before the level, which should have told you something. Now, if you did take it, you're already stopped out in that position, but the basing immediately before the level should be your clue. Now, when I look at this on the 4-hour, my 4-hour trend is, right? And that's the best word that I would use. So I'm not going to trade anything on here. I'm going to let that one be and just kind of move away from it. Looking at the euro yesterday, we had this area of supply on our 15-minute chart. Price came into that little level. We got 1, 2, 3, 4, 5. Okay, yeah, we're starting to do well. We got a nice little trade. We actually got a little bit of a move away. Now, in this case, your stop has to be way the heck up here, right? Your stop's got to be way up here. So even though it's a little wick over wick zone, your stop's way the heck up here. It got nowhere near even a 1-to-1 reward to risk. And then on the 6th candle, we were right back in it, telling you, okay, I should probably get out of this thing at about break even. So now, if you remember that, we looked at this when it was right here. So it was very much a recency bias trade. Price had just moved away from that level. And so we didn't really have time to see strong supply form there. But it didn't really hurt you. There's no reason you should have taken the full stop out. You should be out at the latest right up here at the top of the zone, which is pretty small in the first place. Now, what am I looking at for today? Well, if I go to the 4-hour, my trend is telling me that we're going up pretty hard. When I slide down to the 1 hour and I look at the 1 hour position, oh, that was such a good level that got retested that we didn't talk about. And frankly, I didn't see it yesterday. And we retested that overnight. You know, I just don't have anything I'm in love with. Nothing that I'm jumping up and down about getting short on in this position, or nothing I'm jumping up and down about getting long. The 15-minute level here, and while it's not green, it is 15-minute because it's a wick over wick, is a pretty good level, but it's not, it may not be strong enough to stop price, especially with the basing that we're getting close to the level. So keep an eye on a retest or basing inside of this area, but for now, I'm going to remove that zone. I don't love it as an opportunity. Canadian dollar yesterday, our Canadian dollar, looking at our 15-minute, we came super close, did not get into the trade, and so moved away. That switches this to a confirmation. We're actually basing in front of it right now, and so making it that much weaker. Plus it being a confirmation, I'd want to look right here for my best level. All right, so let me share this grid. And I'm running all right, and then last but certainly not least would be our bonds and currencies. Numero dos. New Zealand dollar is really not anywhere near anything exceptional. Great British pound yesterday. We had looked at 15-minute. Once again, that recency bias. Price came right into this area and then moved away very quickly. Didn't quite pop above the wick of the leg in candle. But then just 6 candles, it just really had done nothing. Overnight, we got a really good retest of this level here, and price moved away from there very strongly. But still, when I look at this on the 4 hour, it's kind of grinding up a bit with some supply up above me. I'm going to look to the 1 hour chart and this area right in here. But I'm not in love with that level. It's okay. It's not the greatest. And so I'm going to make it a confirmation entry on the return. Japanese yen. This one just cut right through my demand level. I mean, just sliced right through the dang thing yesterday on that big one red candle. We came right down through both of these levels pretty hard. And so that's just going to be a quick stop out, right? There's nothing you're going to do about that. And so from this point on, I'm going to look to 4 hour. You know, I'm just going to leave my supply area that I have up here. Now, this has to be a confirmation supply at this point. You could have some decent demand at the origin of this move higher, right in here. And this is actually a pretty decent time of day. Question was, why don't I love that pound level? I don't like the wick over wick with another wick up here and another wick down here. And then on the 15-minute chart, it's a bit more messy. So what I don't like about it is it's just a bit more messy than what I like to see for a totally clean level. It fits all my criteria of a zone. It's just a bit messier than what I like to see from an orderly level. That was my issue on that one. Aussie dollar is still telling me that I don't have a whole lot super close. You do have this spot here. Not formed at the greatest time of day, but I think that's the only one that I like in there. Question back on the CD. Let me share this grid here real quick. All right. Question back on the CD about a wick over wick. $76515 on the 15-minute. So this area right here. Well, in order to get to this one, Andrew, we've got to get through this one, which was just created. And so I think it's okay, and it's actually a pretty good level. I just kind of like the first one a bit better, and really because I found that one more on the hourly chart as well. All right. Well, the dollar is still rising, so we're seeing some fall on these currencies here a little bit in the very, very small time frame this morning, because all these currencies are coming down just a little bit. But keep an eye on the equities today. Let's see kind of what happens overall with these equity markets. You know, we've got the S&P level up here, the breakdown level right there, and then for NASDAQ, we've got a very similar picture up with a potential breakout above. So interesting to see what the equities do. They may do nothing, and if they do nothing, and if you want to trade an iron condor on those, it's actually not a bad idea. So, all right. Well, that's all I have for today, everybody. I will hope you guys have a great day. Right? Have a good Tuesday. If there's anything I can do for you, please, as always, shoot me an email, chuck.fulkerson@tradersarmy.com. I will talk to you soon. See ya.